General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's knock out the chart work. Friday the 31st. Anchor point was Wednesday. Today wasn't really expansion. It was more of closing price, basically unchanged from yesterday. Terminus here today. No, that was Wednesday. NASDAQ on the day, G. Got a doji day. We almost got Monday's high for the CFD chart, but we didn't. Kind of a TGIF, reach up, reach back down. On the H1, you can see we just rebalanced the new week opening cap. On the N15, you can see closed open range gap. They kind of bounced, kind of played in the suspension range all day. Let's look at SPX. Got a more body out the candle on SPX. Look at the respect of the suspension block. It's a good array. Yeah, it's not too interesting for a Friday and it's summertime. I put the weak respect to the suspension block is incredible. It's the 15 minutes. You can see regular trading hours. We opened. We actually came to the bottom of the suspension block here. And swept the high. This is the New York reversal profile because New York made the low of the day close. We took out London and Asia. We didn't do that on NASDAQ though. But this don't look like the better chart to trade because it's more leaky. NASDAQ was actually better. Look at the stock chart. SPY, nice gap up. Kind of refilling that buy side liquidity there. QQQ. We tapped that new day opening gap, but we did get the high. And then NVIDIA. I do like this move up on NVIDIA. It's just a strong stock. Even here, when we respect the EQ, it is down day. And it's like, yeah, they don't really want to push this down too far. They still need NVIDIA. Today was no trade day for me, offside week, so I took it easy. Do what I need to be true to engage. Just more rest. With the price delivered, that adds to my experience. The week played out like I outlined. We did get the Wednesday midweek reversal. It's just the expansion's been paying off. Weird times. If then for next similar date, keep studying this summer price action. It is the best exercise. That's what ICT been saying. Like really dig deep into the 1 minute charts. Did the framework play out? Yes. What do we learn about patterning? It's just a good read on the week. Will I watch for tomorrow? Tomorrow's a steady day. And that's all the work for Friday. Y'all have a good day. Peace.